G'day everyone, my name's Mitchell Sned and I'm joined here today by two of our top guys, our senior analysts who look after the small cap fund, Alex Hughes and John Mills. Guys, thanks for joining us.
Thanks, Mitchell.
G'day, Mitch.
Now, fellas, can you just give us, for all of our investors sitting at home and everyone who's had a look at the InvestSMART's Small Companies Fund product disclosure statement and thought about investing it, give us a bit of an overview as to how we've gone so far and how the fund is starting to develop.
Yeah, so the portfolio kicked off in February this year, and that was just the company's money at the start, but we launched the product more recently to investors a few months ago. Cash balances are still quite high in the high 30% range, but we've also found a number of good opportunities there, so we've put some early runs on the board.
One thing that does continuously come up as we're talking, especially to new people, is the fact that stock markets right now globally are at quite elevated levels. And that is a concern for people potentially looking to come into the small cap fund. How do you guys think about that, John?
Well, I mean, they're absolutely right. I mean, markets seem to just keep going straight up. And that's probably the major reason why we have an elevated cash balance. I mean, our target over, say, a market cycle is around 10, 15%. And so all we can do is just keep looking. We are finding, a decent number of ideas, but we do have an elevated cash balance. It's very difficult to time the market. I mean, we have no idea when the market's going to go down or whether it's going to keep going up. All we can do is just concentrate on finding ideas, and we know over the longer term we will find them.
The other thing is that a lot of the stocks in the portfolio don't make up any index. They're not a part of any index at all. So when the broader market goes down, we could be looking at some uncorrelated returns.
That's right. If you look at most of the opportunities in the portfolio now, we entered those based on company-specific opportunities, or perhaps it was a setback that the company had and that created our interest in the company and a mispricing there. Or maybe it's a misunderstanding of the market, of the company's business model or prospects. So markets might be high, the average multiple of the companies we're looking at might be higher, but it doesn't mean you don't get those company-specific opportunities popping up from time to time, and especially with the market being so short-term focused and really selling shares off so significantly when there is bad news does create those pockets of opportunity.
Now, speaking of our opportunities, guys, I think you've picked one each to maybe go into a little bit further, just to tell people about who are considering investing in the fund or already invested in it and want to get a bit of an idea of the types of companies that we're targeting.
One company that I talked about on the roadshows was Redflex Holdings, which is a red and speed camera operator throughout the world. And if you've looked at the company in the past 5 years, you would have realised how challenged the company's been, because about 7 years ago, some employees of the company bribed officials in Chicago, and the company was lobbed with these civil and criminal investigations, and that really held the company back for many years. But the company has finally put that behind them. They've had to pay a small settlement penalty for that. But now they're in a position to really really pursue the opportunities in global markets, expand their product, start to think about rewarding shareholders instead of just building up cash reserves and spending management's time on focusing on these legal issues. So it's been a key inflection point in the company's fortunes, and we think the market's quite slow to take notice of that.
And it's recently done a capital raising to potentially chase after some of that growth potential.
That's right, yeah. So there was a new CEO that came on board. He's got a strong sales background in the industry, and the company has quite a few significant opportunities that it's now tendering for. So they need a bit of working capital to pursue that, which they've raised. But the company finally has a clean slate, and they've spent the last year resizing the cost base, addressing some legacy issues, just right-sizing the business and really getting in a good position to grow into the future. So yeah, based on our entry price, which is on a very low multiple, we think it's quite an asymmetric opportunity from here.
And John?
Yeah, another stock I'd like to talk about is Austin Engineering. It's in mining services. Austin designs and manufactures the trays and buckets for the dump trucks and front-end loaders, respectively, used by miners and mining equipment or other mining services firms. Before and during the mining boom, it basically expanded around the world and took on a lot of debt. As all cycles do, the mining boom eventually turned to bust, as we're all aware, and Austin nearly went bust. Now it's somehow managed to survive. Hopefully it's raised its last amount of capital, and it's now starting to take advantage of higher commodity prices, better economic growth, and the big miners finally starting to loosen their capex purse strings. What the big miners did was, during the mining bust, if you've been following our recommendations on BHP and South32, they basically cut capex to the bone. And so these trays and buckets, which go onto these front-end loaders and dump trucks, can be maintained, it can be repaired, and basically they put off buying new ones. But ultimately they do wear out, and now Austin is starting to see a rise in orders from the big miners. It is going to be lumpy, but it's very well placed because it's the dominant supplier of these trays and buckets. It's not as big as the big, what are called original equipment manufacturers, such as CAT and Hitachi and so on. It does have the big miners as its clients, and I think in coming years, as the miners start replacing their fleets, it should do quite well. So,
Fellas, one thing that I like to look for when I'm looking at managed funds is conviction. I like fund managers who have a high conviction in their stock picks, so not a broad spread of stocks, so more like the 15 to 25 stocks, which is what we're aiming for within this particular portfolio. But there's another aspect of conviction that I look for as well, and that's to see the actual managers of the fund having their own hard-earned money invested in the fund. I know I'm invested. I know our chairman, Paul Clitheroe, invested in his super fund the other day. Our CEO, he's invested. A number of my other colleagues are. So the hard word, are you blokes in it?
yes.
Yep, we're alongside you there, Mitch. So we've got our own money invested in the fund, and yeah, it's great to see yourself and many other people in the business supporting us too. So
Excellent. Well, fellas, thanks for taking some time out, and everyone, we'll catch you next time.